Penny stocks. They can grab the attention of retail investors like no other thing in the stock market. After all, their prices are so low. In the stock market, a stock's price is the most followed metric. But unfortunately, the price does not reveal any information about the underlying business. The extremely low prices of penny stocks create hope of massive upsides. But hope alone cannot lead us to success in the stock market. Analysis of facts and data surely can. 95% of the penny stocks are just junk, bhangar. But I'll try to show you the other 5%. In this video, we are going to discuss only one of them. This penny stock has crazy demand but no supply. But before discussing this penny stock, I think it is my duty to share with you the main risks of dealing with penny stocks. It is manipulation. The prices of penny stocks are very easy to manipulate. A few operators can pump them and then dump them for their own profits and at the expense of retail investors. According to the market regulator SEBI, in the last 18 months, the prices of 150 penny stocks have gone up 20 times. The potential of losing money in these stocks is very high for retail investors. But if the underlying business of a penny stock is thoroughly studied, just like a blue chip stock, the risks can be minimized. The penny stock that we are going to discuss today is from the IT industry and its price is below 1 rupee. But before we get started, feel free to become an early investor in this microcap channel just by clicking on subscribe. There is potential for long-term secular growth of your knowledge for free. Namaste and welcome to Retail Investing. The name of the penny stock is CES Limited. Here is the financial overview. The market capitalization is only 1.6 crore rupees. The current market price is only 44 paisa. The last time the stock was traded was on 22nd August 2022. The book value of 48.5 rupees is 110 times the current market price. The price to earnings multiple is 0.08 against the industry average of 35.6. The industry PE is being shown based on companies like Tata Elxsi, Persistent Systems, KPIT Technology, Coforge, etc. The return on capital employed is 15.8% and the return on equity is 11.9%. The asset turnover ratio of 1.47 shows the company is really efficient. The promoters have not pledged any of their shares. Both the current ratio and the quick ratio are 2.48. It's a free cash flow positive company and has generated 114 crores of free cash flow in the last 5 years. The company has a tiny debt of 13.6 crore rupees and reserves of 140 crore rupees. The company's cash reserves are 87.5 times its market capitalization. These kinds of undervalued companies used to be available in the times of Benjamin Graham in the 1940s and 50s. Benjamin Graham and Warren Buffett used to acquire the majority of shares of those companies and then force the board to sell the company for huge profits. This entire company is valued at only 1.6 crore rupees. Theoretically, if you take a loan of 1.6 crore rupees and acquire the entire company, you get cash reserves of 140 crores. Even after paying the debt of 13.6 crores, you are left with more than 126 crore rupees. That is how Graham and Buffett got rich in the initial days. But unfortunately, CES Limited has no liquidity as of now. Here is the shareholding pattern. Promoters hold 74.84% of the company. SEBI allows a maximum of 75% for any listed company. The 25% public shareholding also seems to be in the control of near and dear ones. That's because whenever trades happened, the delivery was 100%. But it cannot be price manipulation, because the price is only 44 paisa. Here is the chart. The company got listed in 2017 at 29 paisa per share and in the next 5 years it reached only 44 paisa. Here is the summary of the income statement from 2014. The figures are in crores. In 2014, the sales stood at 103 crores, which in 2023 became more than 4 times at 426 crores. The operating margin has stayed around 10% over these years. Interest payments and depreciation expenses have been quite low. Net profits have been consistent except for a couple of years. The earnings per share is 5.46 rupees, while the price per share is only 44 paisa. That again shows the massive undervaluation. Over the last 5 years, the sales have grown at a CAGR of 16%. And in the last 3 years, it has grown by a CAGR of 15%. However, in the last 12 months, the sales have slowed down a bit. When it comes to profit growth, it has compounded at 19% in the last 15 years. But in the last 3 years, the growth has been negative. The overall profits have stayed positive, but the growth has gone negative. The reason for that is obvious: the economic slowdowns in Europe and America. Here is the cash flow statement. As you can see, the company has consistently made positive cash flows from its operations since 2015. This is extraordinary for any small company. CES Limited provides customer-oriented services to the BFSI, healthcare and e-commerce sectors. The services are mainly IT services and IT-enabled services, which include business process management. BPM services include loan processing, prevention of frauds, photo editing, human resources, etc. Here is the revenue breakup. 26% of the revenues come from information technology services and 74% from information technology enabled services. The company is headquartered at Hyderabad. It's in Gachibowli, which I can visit any day. They also have offices in the American cities of Chicago and Detroit. As of financial year 2020, 99.66% of the company's revenues came from America. The first risk is geographical concentration of clients. Almost all of its clients are from America. The American economy has been going through trouble since 2022. There have been bank failures, debt crisis, and slowdown in the general economy. Many of the foreign clients of Indian IT companies are from the BFSI sector, and that sector is having a rough time. All these things have badly impacted CES Limited. Their profits have fallen by 44% since 2022. Risk number 2 is currency fluctuations. A weaker rupee can make the services of CESL more competitive in America, but the exchange rates fluctuate a lot. That is going to have an unexpected effect on the revenues. Risk number 3 is human resources risk. Even the big IT companies like TCS and Infosys have been struggling with high attrition rates since 2021. CES Limited is involved in business process management services. There have been many cases where companies from this industry actually lost orders from their clients because they failed to demonstrate a competent team. Building a team and retaining it is a big challenge for any small business. When well-trained employees quit the company, it becomes very difficult to replace them. It takes time to hire new people and then train them for the skill sets required in the industry. But this could mean losing clients and revenues. In financial year 2020, the IT sector contributed 8% to India's GDP. By 2025, the sector is expected to contribute 10% to the GDP. The growth opportunities are big, especially for small companies. It has been noticed that after a recession or recession-like situation in America, Indian IT companies grow a lot. So whenever the American economy is out of the recessionary pressures, a big boost to revenues can be expected. In addition to that, CES Limited is planning to expand its operations in the Indian market, which could mean a lot of revenues and diversification. This illiquid penny stock is probably the most undervalued stock that I have found so far in my investing journey, but the market has recognized it. Based on the huge number of buy orders, it seems that the stock price could go up 100-fold in no time. Just to reach its book value, the stock price has to go up 110x. That is crazy. Whatever I said in this video about CESL is purely based on the information available in the public domain, and also under the assumption that the information is accurate. Retail investors should be extra cautious of penny stocks and microcaps because not much information is available about them. And information is power. As always, this video was only for educational purposes. Please don't forget to type in the comment section what are your views on CES Limited. If you learned anything valuable from this video, please like and share. Thank you very much for watching and I'll see you soon. Jai Hind.